Hey, what's up guys? Welcome back to the channel. So in this video, I want to do an unedited cut to essentially explain an investment opportunity that I'm seeing in this market right now. Now, you guys know that I historically have covered Nikola, Plug Power, and all these other hydrogen and clean energy stocks on this YouTube channel. But more recently, I am starting to see an investment opportunity that's brewing in Chinese stocks like Xpeng Motors and Alibaba. Now, I know that most of you guys are probably going to click off if I do mention Chinese stocks, and I did used to cover these stocks on my channel a few months ago, but after I noticed that the viewership was just not that enthusiastic about the specific stocks, I kind of stopped covering them. But I still do have these stocks in my portfolio, and the reason I do have them is because I'm seeing a reversal incoming in the Chinese economy. Now, obviously, the past 6 months have been some of the toughest months to not only be an investor in Chinese equities, but also to be a consumer in China, because we've gone through a recession. They're also going through the COVID-0 lockdowns right now, which are going to be lifted over the next few weeks. But regardless, that has suppressed a lot of the consumer spending, and it has also skyrocketed savings rates in the country. But I think although many people are very dismissive of Chinese stocks in the United States especially, I think there is a good investment opportunity brewing here because unlike the United States, China is expected to go through an economic loosening phase in 2022 and in 2023 because obviously they are currently in a recession. The Chinese government has said outright that they're going to issue a lot of support for the economy through stimulus and lower interest rates. And we all know what happened back in 2020 in the US when we cut interest rates and when we pumped money out to consumers. The stock market ended up rallying insanely because obviously a lot of the tech companies and consumer-focused businesses would perform exceptionally well when consumers are flooded with money. And where are consumers going to spend that money in, at least in China? They're likely going to spend that on EVs, which is something that Xpeng Motors right now leads in terms of growth in the China space. Xpeng is the leading EV company in China, at least from a smart EV perspective. And these guys are going through triple-digit revenue growth year over year, and they're introducing new models at an insane pace, which means that the Chinese consumer is going to have a much wider variety of vehicles to choose from. So obviously, not only are these vehicles going to appeal to maybe the low middle class, but it could also appeal to the middle class, the high middle class, and potentially even the upper class. And it's a very similar story with Alibaba. Even though Alibaba's growth has significantly declined from their growth in 2020 and 2019, this business is still growing in the double digits year over year, at least for their high margin cloud operations. And with a valuation of only a 2 price to sales, this company is still trading relatively cheap compared to its peers like Amazon. And Alibaba is still the leader in global trading volume on e-commerce. And the biggest reason why the valuation compression for Alibaba has occurred is also starting to actually go away over the next few weeks, which is obviously the massive lockdowns we saw due to Omicron. And although over the next few quarters, Alibaba's earnings are still going to be relatively suppressed compared to its peers, there is still a massive room for growth from here because the fear around Chinese stocks is still at an all-time high. And this brings us on to another critical component that many people don't understand about the US versus Chinese stock debate. And that is relating to the phase that both of our economies are in. You see, China is a little bit ahead of the United States when it comes to some of their COVID-related policies and their economic growth out of the start of the pandemic. As you can see, Chinese GDP is still growing at a faster rate than US GDP. And US GDP actually contracted much more aggressively in 2020 than in China because China had much stricter policies to contain COVID, even though that is where the breakout actually happened. And so because of that, the economic recovery out of China in 2020 and in the early stages of 2021 were significantly more aggressive than in the US. Meanwhile, their inflation rate still stayed relatively stable. But what we're seeing now is obviously that the US is starting to go into a potential recession, which is obviously why we've seen so much pain in the S&P 500. Meanwhile, China has already been in a recession for the past 6 months because obviously its timeline has been accelerated. And so although it's still going to be very difficult for China to get out of this recession in 2022, we all know that historically the best time to buy stocks in any country across the world is when we're going through that recession, because chances are valuations are suppressed to record lows. And what do governments do after a recession happens? Well, the government tends to significantly loosen monetary policy, and that is precisely what the Chinese government expected to do in 2022. And not only is China doing that to support their consumers and their GDP numbers, but they're also doing that to support growth in their businesses, because obviously China wants to be a technological leader globally. And that's not going to happen if consumers are not spending and if their businesses are not flushed with cash and growing revenue. And that right there is precisely why stocks like Xpeng Motors, trading under the ticker symbol XPEV, and Alibaba could be very attractive turnaround plays going to the end of this year and going into 2023. Now, obviously, you want to treat these stocks in your portfolio with a little bit of a grain of salt, because there's obviously risks related to the government in China. But I do think with the destruction in valuations we've seen, a lot of that could potentially already be priced in. And we're already starting to see Chinese government vow its support to support China stocks in the United States instead of delisting them. If we have a look at Xpeng stock chart, as you can see, we are back down to that IPO price that this stock went public with back in September of 2020. So the risk to reward you're getting by buying shares here is unmatched to any period of time you could have bought Xpeng back here. And since the 50-week moving average is also trading at around 37, it really goes to show that this stock could be a little bit more oversold to the downside. And although I've been buying Baba specifically since around the $200 to $180 level, I am still a buyer right now, even though the stock has crashed very significantly from when I personally bought in. And the reason for that is this is a solid, profitable business that is not going anywhere, especially if China is going into a monetary policy loosening phase in 2022. And you're getting a very good deal here because you are essentially buying Alibaba on its IPO price. And during that time, the revenue of this company has grown over fourfold, which is a significant amount of growth for a company that does around $200 billion in revenue. And so if we break this downtrend anytime soon, which we don't know when it's going to happen, this could be a great turnaround play. And at least from the macroeconomic standpoint, we could be hitting that inflection point within the next few quarters. But anyways, guys, that's just my take on some of the Chinese stocks in my own portfolio. I hope you enjoyed this kind of unedited, more casual version of this video. And let me know down in the comment section below if you actually enjoy this. But anyways, guys, I hope you enjoyed this video. And I'll catch you guys in the next one. Take care.